Michael Saylor is here with us this morning, and I'd love for you, if you could, it's great to see you. Bitcoin's been on a wild run, and boy, have you been right, but I'd love for you to respond to this report.
Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin reactor. We've got $35 billion of Bitcoin, and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So, Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week, we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share. But over 10 years, that's $125 a share to the shareholders. I think that the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making 500 million a day. I'm staring at my screen, and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing what they're doing. And so if you don't like Bitcoin, you don't want any piece of it. But if you like Bitcoin, then this is a monster for you.